the industry wants to paint Sam as being like the one lone bad actor in an industry full of good actors. But the reality is that crypto is not, it's a garden full of snakes. Everybody that gets involved in the crypto industry is intentionally choosing to break the law to enrich themselves. So I claim that there are no good actors in crypto. If you're getting involved in crypto and you're fully aware of the externalities of what this industry does, how it's defrauding the public at large, and how it's basically looking to upend our markets, our securities laws, and basically defraud the public, I question your motives.
Good morning, good afternoon, good evening, and welcome to IOR Radio with your hosts, Adam and Sal. Software engineer, author, CTO, activist. Our guest today has many labels, but has become best known for his work as a cryptocurrency critic. Since 2020, Diehl has been an outspoken opponent of the investment fraud industrial complex and a thorn in the side of crypto boosters everywhere. He's penned dozens of blog posts and articles critical of the technology, as well as authored 2 books on the subject, The Case Against Cryptocurrency, and the more recent, Popping the Crypto Bubble. Stephen has not only been a consistent critic of crypto's mythology, techno-solutionism, and exploitation, but has taken on the role of activist, organizing the Concern.tech letter to the U.S. House Committee on Financial Services and the 2022 Crypto Policy Symposium, a conference which encouraged critical discourse about the cryptocurrency ecosystem. We can't wait to talk all things greed and graph with our guest and are so happy that Stephen decided to join us so we can all have fun staying poor together. Stephen, welcome.
Welcome.
Lovely to be here, gentlemen. Forward to the conversation.
So you've been doing a whole bunch of stuff, and I want to get to something that you did earlier. I guess it was this year with the Atlanta Fed. We'll talk about that a little bit later. I think Sal wants to ask you a few basic questions about who you are and where you've come from and everything.
I was wondering if you could talk to us a bit about your background and how you got into crypto criticism.
Sure. Just a little bit of background on myself. My day job, I'm a software engineer by training. So I've been working in the industry for about 15 years now. Mostly in around financial services. Mostly I've been working on a lot of boring financial plumbing infrastructure for most of my career that nobody knows about, but actually is really, really important for the world. And so on top of that, I've been kind of a contributor to the open source ecosystem. I've written a lot of things about functional programming. And so my life before crypto criticism was actually quite mundane and quite receded from public view. And around, I'd say 2019 era, I started to see kind of like a real shift in the way the crypto industry was really having a malign influence on the software profession in ways that were really quite disturbing and had horrible, horrible externalities for the world. And so I started to use my platform and write about what I thought was happening in the industry that nobody was talking about, because there's a lot of perspectives on the crypto industry from outside, but there's not a lot of perspectives from within the software industry. And a lot of software engineers prefer not to talk about the subject, to be frank. And so it was really, really important for me to kind of contribute a voice to this particular podcast that was like specific to somebody that had worked in software. It could kind of debunk the myths around blockchain, around crypto, around this alleged financial revolution, because at the heart of it, there's a lot of logical contradictions. And that's what I really kind of set my mind to sort of intellectually deconstructing. And then for the last couple of years, I've been working on crypto activism and trying to help shape policy to fix the crypto problem.
I notice when you speak at various events, it often says Stephen Diehl, engineer and blogger. I guess you're not listing your employer. You want to keep that all separate, right? What's your day job and who you work for is not part of your activism?
Well, it's not really relevant. At the end of the day, I'm a CTO of a company that works on compliance solutions. We apply machine learning to fraud mitigation. At the end of the day, it's not really relevant to crypto activism. It's really orthogonal. Yeah, I keep my personal life and my activism sort of separate.
Yeah, I'm in the same boat, so I know how that is.
So, Stephen, you talked about malign influences in the software industry. Was there a specific thing that bothered you?
So like most software engineers, I've been following this space for a while. I read back in 2008 when the original paper came out. I read it and I was like, well, this is clearly some sort of fringe libertarian project to build some sort of private money. I can disregard this. It's not relevant. And that's what most software engineers actually think about this. So they think it's kind of this weird sort of heterodox, fringes of software that people don't really take seriously. But it really wasn't until like 2019 when there was a Facebook project, the Libra coin, that I started to see that, actually the malign influence that crypto is having, shaping like transnational institutions and their perspective on global finance, could actually be a very, very perverse force in the world. And if Facebook was able to issue its own basically private form of money, that would be a massively malign force on the world, given Facebook's sort of less than stellar track record on many issues. And so that's when I really kind of saw this like, if nobody else is going to talk about what's happening here, I need to be the one to talk about this stuff. And like Facebook was really kind of the sea change where I started, this is actually really bad for the world. Somebody needs to talk about it.
And would you say that since that's happened, that crypto's influence over institutions has increased?
Oh, absolutely. I mean, I can't overstate how captured some regulators have become and how much the sort of crypto narrative has polluted a lot of very elite institutions and some very, very high level people in government who have bought into this, incoherent message, hook, line, and sinker. And some of those are grifters and some of those people are just really confused. And it's really important to have software engineers actually interface with policymakers,
Right.
To correct the misconceptions.
When you look around in the industry, there's a lot of people hyping it, but not very many software engineers. You'd think if you've got a new vaccine and none of the doctors are saying it's particularly good, that might be a bad flag,
Yeah, I mean, if blockchain was the revolutionary technology that its promoters really thought it was, you think like Google, Microsoft, Amazon, Oracle would be all over this, right? But if you look at their quarterly filings, none of them are getting involved in this to any large extent. They're basically ignoring it. If all of the top software engineers in the world basically don't think that this is a very serious technology, as they penned in the concern.tech letter, by the way, then maybe there's a bit of a red flag here. It's really we have a financial interest in promoting the tokens that are the ones that are promoting the technology, not the technologists themselves.
Right. Well, in fairness, so I mean, Microsoft, IBM, they all did tinker with blockchains, but those projects kind of ended up falling apart. TradeLens and Microsoft's Azure, their blockchain-based system all kind of got put down or something. In your book, you talk a lot about famous manias and bubbles, which I thought was really interesting. I guess to give people context on, hey, this kind of stuff has been happening over a long period of time. And the gist that I got was these bubbles pop up in areas where it's either a new frontier, where it's hazy as to what regulations and rules there are. So these people come in and do their own thing, or they kind of rematerialize in markets that have become deregulated. And you chronicle from the 1700s onward, these various bubbles. Do you notice a pattern there? Is history doomed to repeat itself, or are these things new and different as they reappear?
Well, the joke is that the biggest lie in finance is this time is different. These manias have occurred ever since there have been markets, and ever since there's been speculation in markets. I think they're probably going to continue for a very long time. I mean, the joke is that there's a very famous book called Extraordinary Popular Delusions and the Madness of Crowds. This was the best book ever written about Bitcoin, and that was written in 1841. And nothing has changed since then. Financial medias are sort of an intrinsic part of capitalism, unfortunately. And a lot of the same patterns repeat. And oftentimes they pop up in times of extremely low interest rates when there's just too much money sloshing around looking for a place to go. And that certainly has been sort of the American financial system since 2008. And not surprisingly, we got another crypto bubble at the time. So in a lot of ways, this is all very predictable and very understandable.
Well, that's very interesting you say that, because that really reminds me of something you wrote in the book of Popping the Crypto Bubble, which was capitalism invariably and with enormous predictability falls sick to a form of madness. So I'm just wondering, what do we do to stop that madness? Now, you're kind of implying that there's no way to potentially solve this problem, but are there policy solutions that can help?
Well, I think it's important to distinguish between two types of bubbles. And there are productive bubbles and there are unproductive bubbles. So unproductive bubbles are things like the crypto bubble, things like the tulip mania, and other kind of speculative manias that don't actually produce any kind of economic outputs. They're just pure speculation for the sake of speculation. And then there's manias like the railway mania in Britain, or like the dot-com bubble, that largely cluster around new technologies and new ways of doing business that encourage a lot of speculation, but actually produces some tangible artifacts in the world. The railway mania produced all of the railroads in Britain. A lot of people lost their shirts, but at the end of it, basically Britain had a massive railroad network. And that was largely good, except for all the speculation that's involved in it. So crypto happens to be sort of one of the pathological sort of unproductive bubbles. And those are the ones that really regulation has to kind of step in, because at the end of the day, crypto's speculation is a completely non-economic activity. You're not building railroads, you're not building real companies, you're not building, software infrastructure or the internet. You're speculating on entries in a database that you swap between other people, hoping to dump them on a greater fool. This is completely non-economic. And so it will never produce anything. And so it's basically the canonical example of an unproductive bubble. And those are the ones that are the pathologies that we need to fix, not so much the unproductive versions.
So what's the solution for the crypto bubble? What's the policy solution?
Or is there one?
Well, this is an open question. I mean, there's certainly, even within the crypto critical community, there's certainly some debate about the subject.
Yes.
Yes, there is definitely some.
Adam and I have very different opinions. Yeah. So we want you to tell us which one of us is right.
Well, I know Sal just wants the whole thing banned, right? You advocate just calling it evil and mandating it out of business.
Okay, so I would say we need to stop any transfer of value to the crypto ecosystem, whether that's in the form of fiat money, so get rid of fiat on-ramps, whether that's in the form of electricity, or whether that's in the form of tokenizing assets. There needs to be no connection between the real economy and crypto. We need to stop all of that. And if you want to play around with a crappy database, go right ahead. You just can't sell your magic beans.
But you think the government, it should be the government's job to say, no, you can't put your money in that market, even if you want to.
That is the government's job. If we want to pretend that we have a democracy for a moment, then that's the role that they are meant to fill. They need to regulate that and they need to stop it because ultimately it's exploitative.
Well, I mean, if you want to give all your money to your stripper girlfriend that you met Tuesday, that's equally ill-advised, but I don't know if I'd want the government kind of regulating that.
But potentially there's utility there, but I mean, I won't comment on that specifically, but I would say that for cryptocurrency, I would support a ban of transfers of fiat money to crypto because ultimately there's no tether to the real world.
Even a stripper girlfriend has more utility.
Well, actually, I was asked that question once, and I mean, we don't have to get into it, but the adult industry probably has more utility despite its exploitative nature.
Right.
So that just goes to show how bad crypto really is. And with Zeke's investigations, Zeke Fox, who was on the episode last week, he showed that there are human traffickers that are leveraging crypto and their entire business model isn't even possible without it. So that's why I have that opinion. But what about you, Adam?
So my position, I feel like that there's plenty of existing rules and regulations that just simply need to be applied and could be extended to crypto, and that we don't necessarily need to single it out as some kind of particularly new hostile entity. It looks a lot like, as you said, traditional scams. The question is, to what degree does the government get involved in it? That's the big question, and I don't really know.
So, Stephen, you can sort us out.
Yeah, which one of us is right and wrong?
I don't have the answers. Like, this is actively being debated in policy circles at the moment. And the debate about what to do with crypto is a really big problem, and it intersects with the existing laws or policy frameworks, treaties, like transnational organizations. It's a very complicated subject. And in an ideal world, in a completely empty slate, yes, a complete ban would probably be the most optimal solution. But then you hit up against, would that actually be a constitutional thing to do with under U.S. law? Would Congress actually be able to do that? Is there political will to actually do that? Is there a legal framework that we could do that without a total ban? And these are the kind of debates that are playing out within, the op-ed columns of the Financial Times and law review journals and policy conferences. And there's a lot of fairly good faith debate about what the best solution is to kind of minimize the harm of crypto and basically ensure that it doesn't come back and cause the same kind of manias that we've done. So I don't have the total answer to those things. I'm in favor of a total ban. I think there actually is a mechanism that Congress could actually do that, but I think it's politically inexpedient to do at the moment. And the American Congress is not exactly in the legislating business these days, even passing basic things like, the budget for the country requires an endless amount of trials and tribulations. So whether it's actually realistic to enforce a ban, that's open for debate. Absent that, we already have an existing framework called the Security Act of 1933 and the Securities Exchange Act of 1934, which, we've been here before. We've seen what happens when people sell shares in empty shell companies to the public and under the expectations of expecting more and more fools pile into these things. This happened before the Great Depression, right? So we've put this in place, and all of the negative externalities that are present in the crypto market would probably be mitigated by simply applying the securities laws to the crypto market. And I dare say most of it would not be able to exist anymore. I dare say probably 100% of it would basically just cease to exist because it couldn't register. If you just enforce the laws, most of these tokens would have to not be able to sold to American persons. At which point then they have to go offshore, which point they get shut off from the American banking system, which point then the market becomes cut off from dollars, at which point then it's effectively dead. Maybe not totally dead, but effectively dead. And so that's one approach. So I think one of those is probably the most realistic path forward.
Where we meet in the middle is basically if you just declare all these things as unregistered securities, all this is existing legislation kicks in and effectively makes it illegal. Or if it doesn't make it illegal, it takes away all the profit motives and the incentives for these people to play. Yeah, because they can't get around and that's that whole regulatory clarity buzzword that they keep throwing around, which I've heard you say there is regulatory clarity. They just don't like it.
Yeah. Not liking the rules is not the same as the rules not existing.
Right. You talk about another bubble that we are in right now called the venture capital bubble that started in 2010. And it seems to me what's been driving crypto has been this VC bubble. Don't you think? Are they related to each other?
So I would say over the last 10 years since 2008, what we've seen is, 10 years of interest rate policies, which really means that there's an abundance of money sloshing around that's been saturated into the public markets. Basically, there's no upside in public equities anymore. There's no public upside in bonds. So what people do, they look for alternative investments. And venture funds and hedge funds are typically where people go to find uncorrelated returns with the market. And so there's been this glut of money that's been flushed into venture capital as chasing tech startups of diminishing quality over time. This is how you get things like Juicero and Theranos and WeWork, because money has nowhere else to go. And this has created a bubble.
The pizza one is my favorite too.
Oh, the pizza robots. Yeah. Like the SoftBank investment. So this bubble has been going on for quite a while now. And it's been, at least before the pandemic, was become increasingly absurd, where venture capitalists were like flushing money basically at startups with anybody with a pulse could raise, $20, $30 million. And it was completely absurd. And that's really ultimately bad for capital formation when you have a bunch of money chasing opportunities that are completely absurd, because basically it's a form of capital destruction at the end of the day. What's happening is that you're paying a bunch of people to basically perform these acts of faux companies and not actually build any products, which ultimately doesn't produce anything in the world. And so I largely call that a bubble. And I think with the Fed raising interest rates in the last couple of years, that largely diminished, although you can see sort of shades of it with the sort of AI bubble at the moment.
Do you feel that bubble's trying to propagate itself, and that there's VC money that goes to these companies, and the VCs and the founders are also funneling money back into campaign contributions, trying to have preferential treatment for legislation or other things?
Oh, absolutely. This term is called regulatory entrepreneurship. It's basically where you fund companies that are doing things that are illegal under the hopes that they can absorb enough money from the public to change the laws through lobbying and through campaign donations. And it's a particularly pernicious form of American capitalism that's grown up in the last couple of years. And crypto is the canonical example of this. You have some very large funds in Sand Hill Road who basically have started investing in crypto tokens as a proxy for startup equity. And so crypto tokens have no lockup period. So they can be immediately dumped on the public, unlike an equity offering where you have to wait 10 years for an IPO to actually sell to the public. Crypto tokens are immediately liquid. So you can take your token investment in a company that you gave $50 million to buy these tokens at fractions of a penny on the dollar, and then basically take those tokens, call up your mates at the crypto exchange and say, dump these on the public. And then you basically could offload your tokens and sort of pump and dump. And look what happens. You get this sort of spike in the price, then it collapses, and the venture capitalists walk off with a bunch of public money. And there's just this rotting carcass of a company left, which they didn't actually do anything. And this is a very perverse form of capitalism. This is not capital formation working.
That reminds me of something that Jemima Kelly just wrote. You could only consider FTX or any crypto business to be an improvement on the existing financial system if we base things on how much money is being creamed off the top. These VCs are seeing it as a way to quickly make back their investment.
That's precisely right. I mean, Jemima Kelly is also brilliant. She's one of the OG crypto skeptics from way back in the day.
Yeah.
And the Financial Times has actually been one of the predominantly authoritative sources on covering the crypto media and has been skeptical since the start. And Jemima's been talking about this stuff for 8 years now, actually. And she's been right about most of these things. That's what this is. I mean, they're basically a bunch of venture capitalists are funding a bunch of entrepreneurs to create junk investments, dump them on the public, and they make a killing off the back of this by basically in this sort of wealth transfer from a bunch of really unsophisticated retail investors to these privileged insiders, and all while nothing actually gets built. It's a very perverse system. It's
How is that not illegal? That's what I want to know. How is that not illegal? Because traditionally, right, venture capital firm has shares in a company. They don't get paid until the company creates a minimum viable product, business plan, goes public, et cetera. Now, through this proxy token thing, they get assigned these tokens that they can dump on the public as soon as a word gets out that a bunch of money has been put into it. That seems to me that's got to be some form of securities fraud, right?
Yes. This is
so it's just not
fraud,
being
straight up.
enforced? It's just not being enforced? Is that the problem?
Well, the thing you have to understand about regulators is that they only ever go after the most egregious forms of a scam. So they're only going to look at the 5% that are the worst and then bring enforcement actions against those under the assumption that if they bring enough enforcement actions, it's going to stymie other people from trying the same fraud. But if you have these venture capital funds dumping billions of dollars into these companies, it changes the incentive structure of the entrepreneurs. Be like, well, I could take $1 billion in venture money, roll the dice and hope I'm in the 95%, or I'm not in the 5% that's going to get prosecuted. And for some entrepreneurs that are particularly unsavory, that's pretty good odds. It's perverse. It's basically scofflawing against the securities laws, and it's borderline illegal. But a lot of people think they can get away with it. If you're not the biggest nail looking for the hammer, chances are you're not going to get an action letter from the SEC. And that's really very strange.
So Celsius and FTX, they're going to be prosecuted, but people like Andreessen Horowitz, Sequoia Capital, they can probably fly under the radar in terms of most of their investments. Does that bring up another policy plank here for crypto regulation in that there needs to be clawbacks? Because there needs to be a demonstrable disincentive to investing in scams. And one of those things has to be no statute of limitations. We will go back and we will take the money back from you that you made off this illegal behavior.
Yeah, I mean, this is sort of the weird loophole. If you invest in a company that performs a fraud, that in and of itself is not illegal. It's the entrepreneurs that are performing the illegal action, the securities fraud itself, that are actually liable. And this is why you're not seeing the SEC going after, say, the investors in FTX, because they are considered victims in this, actually. They took the money and they knew exactly what they were doing. But at the end of the day, our securities laws, as they're written, going to go after the people who actually perpetrate the fraud. Now, should the laws be different in this sort of regulatory entrepreneurship environment where people are intentionally breaking the law in order to enrich themselves on the back of the public? I would argue that probably needs to be an extension to the Securities Act, but that would require Congress to act. That's a difficult problem.
Because you studied the history of this stuff. What about Madoff, though? You are correct in that some of the people involved in that scheme were not prosecuted, especially the people who were referring customers to him who were making money. But there were clawbacks in terms of those fees and in terms of the money. So does the same thing apply for crypto, or is it somehow different here?
So in the Madoff scheme, there were actually these feeder funds that were basically these large funds of funds that basically looked at the Madoff books and said, this looks somewhat sketchy, but we're going to put money into it because as long as we time the Ponzi, we'll be all set. And they basically added credibility to Madoff's fund and said, oh, look, all these big institutional asset managers are dumping money into it. And so you should as well. Some of their money actually got clawed back when the estate was rearranged after the prosecution. And I would like to see the same thing happen for some venture capital funds that have unduly enriched themselves with some ill-gotten gains on the back of this. But in this current regulatory environment, that would probably be quite challenging. But that would be justice. Get it done.
There's a lot of things that we really agree on, and there are minor differences. But as you were saying, Adam, I think with the regulatory stuff, apply the existing laws. And then if that doesn't work, if there's still problems, that's when we burn it down and salt the earth.
So speaking of applying laws, you're one of the few crypto critics that's probably the most active in lobbying for more regulation or for less involvement between the crypto industry and the traditional finance industry. And I came across a panel that you were on, I guess it was May of this year in Atlanta for the Fed, this FMC 2023. And I'd like to talk with you about that because you went before the Fed at some kind of convention where they were talking about future market technologies and things like that. And you were flanked by the crypto bros. And it was an interesting, I'll put a link to it in the description of the video, and maybe we will play a short little clip. But I'd love for you to talk about your experience of being invited to testify before the Fed and what your feelings were. You were asked a few questions and you each got a chance to have a small monologue of a few minutes. You didn't really engage with each other. You kind of talked around each other. Everybody had their little pitch that they were making. And you came out there and you just matter-of-factly destroyed their entire industry. And the guy just continues on as if nothing had been said. And I could see your leg just twitching during the panel. I want to know what it's like when you go in front of all of these people and you make these claims and then they just don't even react to them. Do you feel like this is just a dog and pony show? They've already made up their minds? Or do you feel like you're making a difference?
Yeah. So as part of my activism, I'm quite involved in what I would call counter lobbying, actually. So I go to a lot of conferences through public policy circuit in the United States and also here in Europe as well, and speak with policymakers directly about what I think needs to be done about the industry and to help them understand there is no there to crypto. There really is nothing there because a lot of these people are very well intentioned. They're basically very long-term civil servants. They're just trying to wrap their heads around this stuff. And none of it actually makes sense. Like there's so much money, there has to be something there. They really need to talk with crypto skeptics sometimes to kind of get their belief system aligned. Because when they hear authoritative people talk about crypto in a way such that actually doesn't make any sense at all, and there actually is no there, it really helps them reaffirm their existing beliefs in the existing system. So at the Fed conference, yes, I mean, the way these things go, they often invite people from the industry to kind of do the both sides of the argument. And so really, we're not speaking to each other. We're speaking to the room full of people who are staffers for Congress, a room full of the top banking regulators in the country, a lot of very influential policymakers at the Fed, and speaking to them directly. So I'm not trying to convince the wanker next to me about selling blockchain to, the government. Crypto is not going to displace the dollar. He's just going to go say his piece and I'm going to say my piece and let the arguments stay where they are. But really speaking to the audience rather than to each other. That's how these things go, really.
Did you get any good feedback from that? Like, do you feel like you won in the presentation or anything?
So the thing about these policy conferences, that the most interesting thing that happened at the policy conference don't actually happen on stage, right? It's all the conversations that happen at dinner, in the hallway that actually really shape policy. And these conferences are full of people that really can help destroy the industry. And there's a lot of people in government, especially in the American government right now, with this current administration that definitely have this out for the crypto industry and want to see it put to an end for different reasons. Some for national security reasons, some for consumer protection reasons, some for financial stability reasons. But we could all agree that something needs to be done. And oftentimes the debates are about what can we do within the existing framework to end the harm to the public. And there's a lot of common ground that a lot of people in banking regulation circles, in law, in policy, and technologists can come together and agree on.
And so if people who are listening to this find themselves in front of someone who can influence crypto policy, what do you need to focus on to convince these people that this is a problem?
So I think debate in crypto critical circles is really important. We should have lively intellectual debate about, should we have slow databases? What even is a blockchain? Is there any intrinsic value to crypto? These are intellectual questions that you can actually have. And some people in the crypto space will have different opinions about these subjects. And as I learned when doing the letter, even something like, what is a blockchain? I asked several hundred computer scientists to define what a blockchain was. My consensus was that nobody knows what this word actually means. There's so many different definitions. And so if you can't even agree about what words even mean, it's really hard to enforce policy. What we need to do as crypto critics is basically have a very authoritative voice about we need policy solutions in action is not an option. And I think that the right solution is a complete ban. I think calling for that is important. And I don't think we should equivocate or try to approach this with some sort of, maybe there's something there. No, I think we need authoritative actions, swift actions against this industry because they're the ones talking to policymakers and they're lying to them outright every single day. And we need to speak with a very common voice about what are the actionable solutions that our governments can do to put an end to this madness.
I want to play, if you don't mind, play a short little clip from this policy session so people can see what it is that we're up against. You talk about these people. This Richard Walker guy, some of his statements just made my brain hurt, right? I'll play just a few minutes of it. Let me share the screen so you can see this, and I'll get you to comment on it. You pretty much nailed him when he was talking about how they needed regulatory clarity by saying, hey, there is regulatory clarity. You guys just don't like it. So this is the word salad that this guy spews, and let's just give everybody a taste of it.
Thank you, President Bostic and staff, for inviting me to participate in the conference today and this panel specifically. Web3 and blockchain are general purpose technologies. Web3 technologies have emerged and scaled through crypto, but will extend into new uses and new use cases going forward based on transformation of all aspects of finance. To understand where we are now, a parallel is the internet in early days emerged and scaled through gambling and vice-based activities.
This to me is one of the big annoyances, right? They compare crypto to the internet. And in this case, he's actually cherry-picked gambling and vice-based activities as a parallel to, hey, crypto's all gambling and vice-based activities.
Porn. He's talking about porn. That's what he's saying. That's what he's actually, let's read between the lines here.
Don't you find it funny, though, that he's like, hey, there was a bunch of criminals in the early internet, too. And there really wasn't. It was all academics, right?
And while those activities persist today, the state of the technology then was weak. The belief that it could be something meaningful was low. But today, the internet has extended as a general purpose technology to provide an amazing infrastructure for finance and commerce. And Web3 is positioned to do the same. Web3 companies have attracted $95 billion in investments between 2017 and 2022 across 4,000 companies. The functional areas covered by these companies include blockchain and platforms, core infrastructure, developer tools, financial market infrastructure, and user applications. The innovation over that 5-year period was significant and provides the foundation for what's happening today in the space.
Where's that innovation? Have you seen it, Stephen? I'm just wondering, Stephen, have you seen the innovation? Because I haven't.
I mean, the problem with this is that for years, the crypto industry is sending people like this to speak to the most influential people in policy circles. And they tell a story, and it's a really nicely worded story. Still, the problem is it's not true. But in the absence of people from the software industry actually coming out refuting their claims, policymakers take this stuff at face value because they don't know otherwise. They understand a lot about law, they understand a lot about government, but they don't understand technology. And so when somebody like this chap comes there and says, oh, this is like the new internet, they're going to take him at face value because he has credibility. And that's how policy gets perverted, and that's how regulators get captured, and that's how inaction happens. So we really, really need other technologists and software engineers to go actually out there, put yourself in touch with policymakers and talk with them and say that there really is no innovation here. Web3 is a load of bullocks. And this guy is basically just had a bunch of bags to sell to you. And he's trying to shape policy based on that. And it's a really, really pernicious influence on our government, and money buys influence. Unfortunately, the crypto industry has spent a lot of money to ensure that they're not regulated. And that's led to the bubble, basically.
When you hear these people saying this stuff, is there anything you feel like you should be doing that you're not doing?
I just wish I wasn't the only one up there doing these things. I can't stress this enough. If you have other technologists need to go and speak to policymakers, because I can't do this alone. Other computer scientists, other software engineers need to get involved in shaping policy and get involved in public life, because otherwise it's run by these crypto lobbyists that get paid lots and lots of money to push their agenda on Washington. And there's basically no apparatus to push back on that. They're basically just let to have free reign, just like Sam. Sam Bankman-Fried almost got his laws passed to reshape securities laws in the United States in perpetuity. That should scare you. And that's what's going on here. They're spending billions on this stuff, and it's so pernicious.
There are a lot of resources that are being put behind these crypto companies. They are conning billions of dollars. They have money to spend. People who are opposing this, we don't have those kinds of finances. Adam and I were running a podcast to try to talk about some of these issues. We're not getting a check from George Soros, unfortunately.
Yeah. So the sad fact of the world is that there's actually no money in crypto criticism at all. The most of us that are like doing this stuff are doing it out of some twisted sense of civic responsibility and just not wanting to live in a world overrun by crypto bros. And so we spend maybe like 1 to 2% of our time engaged with public life to help shape policy on this issue. But there's absolutely no money in crypto criticism, absolutely none. So you're doing this as a public service for public, for the greater good of society. And so ultimately that means you're basically donating your time to basically affect change in the world. So I set up an organization a while back called the Center for Emerging Tech Policy. It's still quite small at the moment, but we're focused on basically doing some very simple things, which are basically writing letters to our policymakers and responding to requests for comments from government bodies. And there's like hundreds of these every single year where agencies will reach out to the public and ask them for their comments about specific policy prescriptions. A lot of those involve crypto. And basically, they hire all these lobbyists to do this activity. And this has an outsized influence on shaping policy, both here in Europe and in the United States as well. And so even just something as simple as responding to these RFQs from different agencies in the federal government, this takes a very small amount of time. You can write one in the evening, write about your opinions as a concerned citizen of the United States or as a concerned citizen of Europe about what needs to be done. And this actually does change things because a lot of these times they're actually mandated to read the requests from the public. And oftentimes, if you do these things, you get comments back from members of parliament or staffers who want to engage further about this. And then you can plant the ideas about crypto criticism in their own mind, because a lot of them share the same perspective, but they never hear from people like us. So it's really about reaching out to people that are like, convincible and talking to them in very simple terms they understand. And they often come from a very different world than us as software engineers. They have a very different conception of technology. They're very deep inside government and they have a very different view about how things get done, but they truly just don't understand the technology. And it's basically on us as technologists to help our policymakers understand how to regulate technology better.
Yeah, it's interesting because, as you said, a lot of the crypto critics come from a tech background, but we don't have the experience. We don't know how to organize. We don't know how to lobby. We don't know how to do these things that the crypto industry seems to be quite good at.
Well, also, it's not in most people's interests. That's, the big problem, right? They have all the money on their side, and that's hard to fight.
Well, you have to wage a war in the court of public opinion. And the good news is that crypto has a rubbish reputation right now after everything that happened in the last couple of years. And so shaping public opinion helps as well. Like helping other journalists understand the space is really important as well. So, it's really helping educate the public that really there is no there. And you will still see debates about whether Web3 is actually a real thing in op-ed columns these days. And you have to understand that most people are not technologists. They can't see through the bullshit. And, it's really important to have a very condemnatory view about this stuff in public and speak out and move the Overton window such that condemning crypto is seen as acceptable. And unfortunately, a lot of people in the technology industry, if you're a working technologist, say Google, you probably look at crypto and be like, well, this is a load of bull. I can just ignore it and move on with my life and it won't cause any harm. And that's why they only hear from the lobbyists, because the authoritative technologists and the computer science professors just basically just ignore it and move on with their lives. And it creates this information asymmetry where the only people that policymakers hear from are people with a vested interest in advancing the interest of the industry.
Right.
The Center for Emerging Tech Policy, what's the best way to leverage this organization you've started?
Certainly. So we're still a very small organization. There's only 4 people involved with it, and they're all part-time on a volunteer basis because, like I said, there's no money in crypto criticism. So, but we run some small events every year. We do a bunch of, we're called Chatham House style forums where we bring other like-minded crypto critics together to talk about strategy and how to influence government. So if you look on our website, we have a bunch of blog posts about our upcoming events. And if you're interested in that, reach out to the organization. I'm always happy to talk to other crypto critics and see if there's a way we could leverage our expertise to influence transnational financial policy. And that's really what we're aiming to do.
Thank you, Stephen.
So obviously you wrote about Sam Bankman-Fried like a year ago that he was crypto personified, that he's not an outlier, right? He's kind of just a great example of the typical person that's hyping crypto. I'm curious, what do you think is going to happen with this? Is there anything that surprised you about the trial? And then also comment on our boy Michael Lewis and his bizarre position on SBF. And what are your thoughts on that?
Let me pack there. No, I mean, Sam, the industry wants to paint Sam as being like the one lone bad actor in an industry full of good actors. But the reality is that crypto is not, it's a garden full of snakes. Everybody that gets involved in the crypto industry is intentionally choosing to break the law to enrich themselves. So I claim that there are no good actors in crypto. If you're getting involved in crypto and you're fully aware of the externalities of what this industry does, how it's defrauding the public at large, and how it's basically looking to upend our markets, our securities laws, and basically defraud the public, I question your motives. I don't think there's any way that any ethically minded person could ever get involved in this industry knowing what we know now. So Sam is going to get crucified by the federal government. I fully expect them to find him guilty in this trial. It ends in like 6 weeks or so. How long he serves in jail, I think they're going to throw the book at him. I think it's going to be like another Madoff level case. I think he's probably going to be in jail for a very long time.
Do you think his parents are going to get away or what?
Oh, well, they're being sued by the estate, the FTX estate at the moment. I think they're probably not going to go to jail, but I think they're probably going to be broke after this trial, after all the legal fees. And, he's probably basically destroyed his entire family. And from the accounts we've heard so far, they did a lot of malign things and embezzled a lot of money from the company. And so I can't say I'm too sorry about that.
I mean, but when your parents are supposed to be experts in compliance and the law, how can they be victims? How can they just have gotten taken advantage of by their son?
Well, they were the one perpetrating the alleged fraud, sorry. But, I mean, they are just as guilty as Sam, in my humble opinion.
So what is your take on Michael Lewis and his bizarre position on SBF?
Yeah, I mean, Michael Lewis never lets the truth get in the way of a good story. And his other books have taken a very sort of liberal reading of other industries as well. Like Flash Boys is a great work of fiction, but that's what it is. The same thing with some of his other books as well. They're riveting reads, but unfortunately, Michael Lewis likes to tell a story more than he likes to tell the truth. And I think he got too close to Sam and sort of drinking the Kool-Aid around him. Some of his comments about this stuff, like FTX being a legitimate business, I don't know what he's smoking. All four of his lieutenants basically confessed to defrauding the public. So I don't know how there's a legitimate business here. And I don't know what kind of mental gymnastics you have to do in order to rationalize this, but I don't think his takes are going to age very well.
Sometimes when you're running a business, you just accidentally misplace $6-7 billion. It just happens. Yeah. It's a normal thing.
When you have no board of directors and no CFO and no controls, yeah, that's what happens because he set up a structure that allowed him to embezzle the money. That's why it's a fraud.
I mean, yeah, QuickBooks is the best accounting system for a billion-dollar business there is. We all know that.
Precisely. All this stuff is really bizarre because truth is stranger than fiction. There were so many red flags on FTX, on all these offshore exchanges, on Tether, on the crypto industry at large. And basically the media basically just ignored it and be like, well, maybe this is the future of something. Maybe we should just play along. And it was a lot of this credibility building that institutions and the press really gave to crypto to humor its conceptions, even though they were intellectually incoherent. And they're like, all of crypto is based on logical contradictions. Like there is no there to any of it.
Then is there a larger and a broader indictment of our economic, financial, and political institutions because they're not able to reject something like crypto?
I think the information environment we find ourselves in, especially like post-social media, is very bizarre. The indictment that we live in is sort of a post-truth society where everybody is constrained to these filter bubbles where they only get their information from sources that agree with them, has created some very, very perverse externalities. And crypto, I think, is largely a phenomenon of that. If you take the sort of populist sentiments that rose out of the banks getting bailed out in 2008, then mix that with this sort of toxic slurry of there is no truth, markets don't exist for a purpose anymore, and technology will save us. You get this sort of brew of financial populism that manifests in the crypto bubble. And so it's this synthesis of all these sort of external milieu that, brewed into what is this sort of really, really pernicious phenomenon that mirrors other phenomena from the past, but like in some ways it's sort of an internet amplified form of tulip mania.
Yeah, there's a religious aspect to it as well.
Correct. Yeah, there's definitely very cult-like aspects to crypto where this is in-group and out-group. There's these sort of thought-terminating cliches like have fun staying poor, not going to make it, this is the future of finance. And like, sometimes these things tap into like really real concerns. Like the current financial system is deeply flawed. There's massive income inequality. There's a pernicious influence of capital to shape regulation, especially in the United States. And so those are real concerns. Problem is that crypto presents itself as the solution to all these things while it's picking people's pockets.
It seems to be the personification of that as opposed to the solution.
Yeah, I mean, it takes people's legitimate anger and turns it into gambling addiction. That's what's so horrible about it. It preys on the least able to actually, spend the time to actually deconstruct these things intellectually. And it tells them seductive stories about financial liberation, freedom, and that taps into people's legitimate concerns and sells them a load of lies. They just have to buy tokens and somehow this is going to do all these magical things. And they're all lies, unfortunately. It's really quite sad.
So how do you feel this market is going to unwind or unravel? We've seen multiple pundits say that the industry is already collapsing, and many of us kind of feel like it died a long time ago, but it's being just dragged around like Weekend at Bernie's, with new faces and new sets of clothes. Do you see this thing kind of flaming out spectacularly, or do you see it fizzling out? Where do you see things going in the next couple of years?
So the thing about Ponzi schemes is that you can starve them. Ultimately, nothing in crypto actually generates any income. So the money that pays out old investors can only come from bringing in new investors. If you stop bringing in new investors, eventually will collapse. But this can take a while, and it's really difficult to time when it will happen. But crypto's fate is sealed. It could just last for quite a while. And if the current government in the United States continues on the warpath toward stymieing inflows into this market and enforcing the securities laws, I fully expect it to be pushed offshore in the United States and losing access to the deepest capital markets in the world and losing access to basically banking services would effectively destroy the industry. Maybe not entirely, but it would move to some offshore havens where it would be used for dark markets and money laundering. But Bitcoin would be probably trading at like 20 cents or something. Nobody would care about it. It would be systemically irrelevant. And basically the crypto era would be all over. But it's really important that Congress not pass any of these stablecoin laws, because that's the one thing I see that could cause another kind of mania again.
Kind of legitimizing it, right?
Correct. Yeah. Or passing one of these ETFs that would allow institutional investors to dump money into these funds to buy crypto assets. That would be bad as well. So long as none of those things happen, it will eventually die.
And do you think the digital asset anti-money laundering bill is going to help with that?
So this is the bill proposed by Elizabeth Warren and 10 other senators at the moment. So this is a bill that I think is very common sense and has bipartisan support, which would basically just enforce existing money transmission and anti-money laundering frameworks on crypto providers, which are very loosely regulated in the United States at the moment. They're basically regulated as money transmission businesses, which, to put things in perspective, is the same regulatory framework TurboTax falls under. So this is really, really loose. And so enforcing the same kind of laws that banks have to apply to transaction monitoring, that you have to file suspicious activity report, that you have to report specific activities that might fall under sanctioned activities and report those to the banking regulators, would do a lot to mitigate the uses of crypto that are being used to fuel illicit financing. And so I think this should have bipartisan support. And if it could go through the House, become a law, that would be great. But I'm not holding my breath at the moment because Congress is not exactly in a legislative business these days.
Now, you have been very critical of cryptocurrency, but some of your critics have accused you of hypocrisy, saying that the company you work for has actually built blockchain products. How would you respond to that criticism?
Yeah, so I actually worked on what I would call enterprise blockchain projects. So the distinction between enterprise blockchain projects and cryptocurrency projects is that there's no token. So the best criticism of enterprise blockchain technology, which is entirely valid, by the way, is that these things are just glorified databases. That's exactly what they are. They're basically like Postgres, Oracle, used in a way that is an authoritative source of record for businesses. So that offends some people. That's fine. If you're offended by Oracle databases, that's fine.
So speaking of glorified databases, one term that's getting thrown around a lot right now is CBDCs, central bank digital currencies. We're seeing both people in the crypto side and on the people of the government side using this term. Are they talking about the same thing?
So CBDCs, or what are called central bank digital currencies, are a theoretical proposal for basically a way to give the public direct access to public money. So when you have a bank account, you don't actually have public money. What you have is what's called commercial bank money, which is basically a arrangement between the bank and the federal bank or the central bank, which actually issues actual money. And so you actually have a liability of an organization which takes your money and gives you a claim, and then takes that money and basically invests it in productive activities in the economy, like mortgages, right?
That's supposed to be a liability, but isn't it guaranteed by the government, by the FDIC? And hasn't nobody really lost money in 100 years? Or is this another one of these problems that doesn't really exist that people are trying to solve?
Yeah, I mean, your bank deposits are secured up to $250K in the United States. So, I mean, largely this is an academic exercise. There's a bunch of economists that are like, oh, what if we could reimagine sort of hub and spoke central bank model in a way that the public actually had direct access to public money? And there are people that I respect on both sides of this debate. I personally look at CBDCs and I see them as a solution in search of a problem. I don't quite see the reason why we need these things, but given the fact that these things don't actually exist, they're sort of like theoretical white papers that the ECB, the Bank of England, and the Fed are sort of writing at the moment. I wouldn't get too worked up about it because this is a sort of theoretical financial reconfiguration project.
Well, it doesn't sound like that if you talk to crypto people.
It sounds like their freedom is being stolen.
Yeah, they hate this stuff. Yeah.
I mean, the crypto people that I hear from, they're saying it's already underway. You know, they're talking like it's coming. And they also imply that blockchain has something to do with it, which I can't find any evidence of that.
Yeah, I mean, like central banks, the models being proposed right now don't involve blockchain at all. They're basically direct liabilities of the central bank, backed by the full faith and credit of the government. And basically, some of these projects they're basically just interbank clearing systems. Public wouldn't even actually have access to them. So CBDCs, people get really, really worked up about them, but it's all much ado about nothing, to be frank, because they're theoretical at the moment. There's not widespread support from the government to actually build these things. And a lot of skeptics think that they're never actually going to happen because they're kind of a solution in search of a problem.
Yeah. And I think the narrative that we hear from the crypto side is that this is the government's attempt to copy blockchain technology. And that's a validation that blockchain works because the government's talking about CBDCs, and CBDCs are kind of like blockchain.
The answer is a lot more stupid than you might actually think. Like this is famous British comedy called Yes, Prime Minister. And they talk about this like fallacy called the politician's fallacy. Something must be done. This is something, for we must do it. And that's basically the reasoning that goes into the right CBDC is like, crypto's a problem, so let's do something about it. Let the government get ahead of this. This is something. Let's do this, even if it actually makes no sense. And CBDCs are largely, there are a bunch of government agencies writing papers about sort of theories about public money that I don't think have much water to them. So people get really worked up about this stuff, but they really shouldn't.
Well, speaking of crypto talking points, there has been something that's been making the rounds. And Adam, you pointed this out to me that people are talking about tokenized assets. A lot of crypto people are talking about tokenized assets. So turn your mortgage or turn your car into a crypto token. What are they talking about?
Oh, so like tokenization of assets.
This seems to be the new buzzword, right? This is the new thing. NFTs they can't talk about NFTs anymore. Smart contracts are being hacked all over the place. It seems like every few months they have to create a new narrative. And even on the panel you were on, Mr. Walker was talking about tokenizing private assets as a way of unlocking the liquidity people have in their real assets, now that starts to worry me. Do you have any kind of impression of that kind of scheme they're trying to spin?
This really goes back to what we talked about with the enterprise blockchain stuff. When I used to work on some of these projects back at the banks a couple of years ago, like they would start with these very, very easy assumptions is like, okay, we have all of these different counterparties that trades that we're doing. What if we could digitize all of them and basically do straight through processing of all of the paperwork? What if we could put that in one authoritative place, right? And that would be basically, it would be called straight through processing traditionally, or it would be called digital transformation sometimes. And so a lot of so-called blockchain projects, basically we're like, let's call it a blockchain, and we'll basically just do digital transformation to automate some internal back office processing at the bank. And tokenization basically just become the new form of that. So to the extent that it actually has a meaning, it's basically just an umbrella term for consultants to sell more digitization consulting.
It seems to me like it could also be their version of securitized mortgages, right? Of the credit default swaps and all that. They're just taking actual assets, creating some kind of bizarre instrument that they can more easily trade, but it doesn't provide as good a due diligence on.
Well, I mean, there actually is a legitimate interest in doing straight through processing and digitization, because if you look at a lot of banking infrastructure, I don't know if you guys have ever worked in this space, but when you trade a fixed income product on your broker app, the chain that it actually goes through will often involve things like, mainframe computers from like 1970s that hook up to like fax machines that like get sent to people in India, and COBOL systems. And there's actually a legitimate case for improving market efficiency and market infrastructure. And the systems are so bad that oftentimes they go down and nobody understands why. And so they end up being done manually by people in spreadsheets. And that's how like billions of dollars will get traded by people emailing Excel files that they hand enter in from, COBOL systems. This is the mainstay of the financial system. This stuff is so bad. Tokenization, from what I've heard from some people, often either refers to some grifty crypto thing that some bank is doing to explore crypto, or refers to something really, really mundane, which is like, let's digitize this ancient COBOL system end to end and replace it with Oracle, right? And that may actually be good because it would increase, efficiency and transparency in this process. So I don't want to lump all of the tokenization thing as being all rift, but it's not really well defined, and it often just refers to existing digitization, really.
So you have to really be careful about who's using this buzzword.
Yeah, I mean, if you're working in a regulated industry, any one of these projects will be given so much scrutiny by lawyers and so much compliance paperwork to make this thing happen. I'd be kind of shocked if any of these tokenization projects are actually doing anything illegal. And they're still subject to the same regulatory framework. So it's not like there would be less due diligence. And generally, more efficient markets are better for the economy. That said, I think when I go to conferences and talk with people, oftentimes it becomes this sort of blockchain la land where they're like unlocking, liquidity through the transformative power of blockchain. And it's basically just a slurry of buzzwords. So there is that as well. So it's important to peel the two apart, I think.
What's going on with you now? What's your priorities these days?
I mean, I spend a bit of my time just talking with folks like yourselves and helping policymakers and journalists understand why we need to ban crypto, why blockchain is not going to transform the world, and running some policy events to help slowly destroy the industry. And once blockchain is no longer a word anymore, once it's basically considered a dead-end technology, once crypto is crashed to near zero, then I can retire, never have to deal with this anymore. Hopefully. Never hear the word blockchain ever again. That'd be glorious.
Amazing. Yeah. We'd all like that. I'm curious what happened to the Crypto Policy Symposium, because that happened in September of 2022. There wasn't one for 2023. Is that something you felt wasn't necessary in the current climate?
Oh, actually, I have some more news on this, but I can't announce it on this podcast. But we are thinking about doing another one, probably in the United States, but more details on that later.
Okay, great.
Well, let us know. We'll certainly show up and cause some problems.
Yeah.
Well, I want to thank you so much for coming on the show. And we're obviously big fans. I really appreciate your support when I put out my documentary too. You were one of the people that was very supportive of it. And I'm very grateful for that. And I thank you.
Oh, no worries. It was a lovely documentary, actually. You told the hard truths that need to be told. So the role of people like yourselves is actually really, really important, because journalists are often very constrained by what they can say and what they can accuse of being a fraud, even if something is nakedly a fraud. And so the role of people like yourselves who have platforms and can help shape public opinion is actually really important, because we can say the hard truths that need to be said, and policymakers and journalists often can't. So that's the delicate role that we play in this ecosystem.
Have you run into any kind of blowback from your criticisms? Have you had any legal threats or other kinds of things?
Oh, they hate me a lot. Like, I'm probably up there with like Gensler as far as being like crypto's public enemies. Yeah, I mean, they pretty much attack me 24/7 for the last couple of years. But like, it's a bunch of kids in their basement, screaming into the voids. Can basically ignore it. These are not serious people, and I don't have to take them seriously. And so, at the end of the day, I'm just going to keep doing my counter lobbying to destroy their industry. Let them scream at me all day. That's fine.
Well, Stephen, we very much appreciate the work that you do. We appreciate all the support you've given us, as well as, I'm sure, countless other critics. And thank you so much for coming on and talking to us today.
It was lovely talking with you good gentlemen today. And hope to talk again soon.
Hey, thank you for tuning in and listening to our latest episode. We much appreciate it. And if you would like to support us, please subscribe to the YouTube channel at YouTube/American Scream Video. You can also subscribe and follow our podcast on iTunes, Spotify, Google Podcasts, Podchaser, and other places. We're all over the place. And of course, visit our website at ioradio.org. And be sure to check out our Discord. You can find a link to that on ioradio.org where you can join and participate in the conversation 24/7.